It is March 17th, Marvelous Tuesday at 4:31 EST. I love doing webinars because it's never boring, because every time I get different questions. So let me share with you the format of the webinar. First, I highly encourage you to recognize the risks involved in trading and to review in detail US government required disclaimers. Remember, very crucial rule, do not ever trade with risks you cannot afford. Why do I love doing these webinars? Because as you will witness on your questions, each and every time I will show you the price repeats the same dance each and every time. I recognize that years ago, when in 2008 I got rid of every single indicator that created nothing but disappointment, and I started concentrating on the price. And within 10 months working 20-hour days, 7 days a week, I developed my first new strategy. I started recognizing that price is not random, that price is absolute perfection, and continues repeating the same dance time and time again. For example, I recognize familiar faces, and I would like to remind you what happened on S&P today. First of all, let's go back a day before. When we came to the markets and S&P was here on Monday, I said, what a marvelous day to take a day off. As when price comes to reversal zone, the only thing you can do is monitor for short trade. But trend could not be more clear. Trend is magnificent, very powerful. And for 4 hours on Monday, S&P was doing absolutely worthless corrective dance. After the close of the trading room, you could have bought S&P right here. There was an opportunity to buy outside of reversal zone. Once you start entering position at reversal zone, your success rate is 20%. And that's what I recognized about the price. Price continue repeating this dance time and time again. And I developed my own Fibonacci levels. I don't use traditional Fibonacci levels. Traditional Fibonacci levels are so powerful that they cannot be reached. And as you could see, everything spelled out by the price since Friday continue playing out. Those of you who were in the room this morning, what did I do? I only bought S&P from this level. We've taken 5 long trades. Each trade was between 2 to 3 points each. And every time we came to reversal zone, we closed the trade. That's simple. And what is S&P doing currently? Oh no! Finding selling pressure as expected. And what is S&P telling me right now? More than likely, it will continue further up. But it's way too late to buy S&P. The buy on S&P was here. If you had monitored my Fibonacci archives, you would know that was also exact same dance as S&P had done on monthly charts. The most volatile markets we had seen in the month of October. And here is the shocker. Correction is over. Last chance to buy. And what is S&P doing right now on monthly charts? 4 months of bearish corrections. Structure identical on S&P monthly too. What we've been doing on hourly charts. 5 long trades yesterday. Beautiful day to take a day off. And that's what separates knowledgeable trader from trader who's determined to be at markets all the time. Cannot be more opposites. Market give you either correction and then reversal. Walk away when market in correction. That was ultimate test of your knowledge of the price yesterday if you traded S&P. So for that precise reason, I developed a method that has no indicators whatsoever. This is all I ever look at. This is my charts. Tells me volume, tells me reversal, tells me profit targets, tells me where corrections are. It's all in front of you. This is the book. This is the stories that market writing every day. And it doesn't matter what you trade. Doesn't matter if you trade bonds, stocks, options. Everything has exact same dance. I developed key rules for entry based on price and Fibonacci for exits. Method applies to any instrument, any time frame, and any platform. And I cannot be more proud of the method I developed. It is very precise and very accurate. Since 2008, I developed up-to-date 17 strategies. In the course, I teach 3 strategies. This month, I'm doing something that I do only once a year. So therefore, in summary, no software, no indicators used, simply price action, entering markets using market structure, exiting markets using Fibonacci levels. If you were in the trading room today and you witnessed very fascinating dance on oil, everything that we expected since Friday and everything that I've been spelling out had happened. What has happened on oil? I said more than likely oil will collapse to this level. But nevertheless, when we are at 43, we will only be buying oil. Today we had done 4 long trades on oil from this area. And in just a second, I will show you exact reason why you should have shorted from this level. But first, let me show you where oil is heading next, as spelled out by the price a couple of months ago. On weekly chart, oil pointing up to 41. But that's actually quite boring. The chart that is not boring on oil is oil monthly, short from 106 based on AlphaWaveTrader method. Every time I come to Friday class, I show my students, you knew my method in 2011, you were shorting oil from 106. Price in 2011 spelled out, oil is heading for spectacular collapse. And as you could see, if you browse my forum, if you browse my blog or YouTube channel going back a few years, you would see price is very predictable as we monitored this short for the last year, but all spelled out by the price since 2011. Last month we witnessed only bullish correction on oil. So when I get a bunch of emails and people say, hoo, I bought oil because reversal zone had been reached, I say, ouch, it's only a correction. Oil is not done. If you know the rules, you knew the answer on February 28th. It was one of the most powerful educational Fridays ever. Exact same formula on oil monthly as I use on oil weekly, on oil hourly, as I use on any chart I trade. So why in the world I don't believe in indicators? Because no indicator on the planet would ever tell you where the price is heading to. Every single indicator mimics the price after the fact. I worked with software developers and I continue working with software developers only to learn and only to witness that the most powerful thing there is price. It tells you where it's heading, it tells you where it's reversing, it tells you where correction is, it tells you everything you need to know. Indicator will never, ever tell you where price is heading to. Your knowledge will. Moving averages crossover is one of my favorite indicators. They're absolutely perfect 20% of the time. Why? Because moving averages crossover is perfect in trending markets. Trending markets occur only 20% of the time. You get in serious trouble if you're using moving averages crossovers in ranging and consolidation markets. By the time market tells you long, you're supposed to re-enter short. For example, look on the structure on S&P. Ouch! Excruciating. Imagine you traded moving averages crossover here. Smash. Long, short, back and forth, worthless. Knowledgeable trader would say, you know what? I ain't touching that fluff. We have a mantra in AlphaWaveTrader Club. Market give us flappuccino, we go get cappuccino. We ain't babysitting the fluff. When I work in private mentoring with my students, I log into their computers to see what they had done prior. 80% of my students had been traders for over 2 years. They've been through the trading jungle, they burned through a lot of money only to recognize the only thing that matters is pure price. Only about less than 5% of my students are absolute beginners. I will show you the link to audio testimony where you can listen to the graduates. A couple of them are absolute beginners that never placed any trade, and guess what? They have the least difficulty. They have no indicator addictions. This is ultimate investment in indicators by student who been a trader for 20 plus years. I logged in into Jim's computer for the first time and I said, let me see what you've done for the last 20 years. I stopped counting at 9 indicators. That was it. Huge investment. Did it produce any return? What is your knowledge of the market structure? None. What is the price telling you? Can anybody see the price here? Price is completely masqueraded by numerous flashy stuff that don't deliver any results, don't tell you anything about the price. Therefore, encouraging dependency on indicators. The size of the brain you use as indicator addiction is the exact same side of the brain you use as addiction to all sorts of wonderful things in life that don't produce good results. And it's very, very crucial to recognize that. Magic happens if one thing you learn here. Remove all the indicators, become crazy and fascinated about price, spend years studying it, you may end up developing your own method. I'm still fascinated by the price. I still have a glass of champagne and study the charts as much as I can. And that's the reason why currently I'm finalizing my strategy number 17. And I guarantee you, what I know about the price today is nothing. Compare what I will know about the price next month, next year. 10 years from now, I will know 10 times more. Knowledge never ends. Clarity of the price becomes more and more clear each and every day. So if you remove all the indicators, you see very, very clearly what you need to know as long as you apply crucial rules I developed. And that's what I teach in the course daily. And that's what I demonstrate in the trading room daily. I will post the invitation to the trading room for this Wednesday and Thursday, as well as I highly encourage you monitor your inbox tomorrow morning for the invitation to the trading room. So why is Fibonacci such a crucial component to AlphaWaveTrader method? It's a confirmation that nothing in this world is random. It's a confirmation that everything that surrounds us has absolutely perfect symmetry. And this is what was discovered by Leonardo Pisano, who recognized this sequence of numbers creates golden ratios in everything that surrounds us. This sequence of numbers is what warned me all down life when I said Amazon is setting up for magnificent collapse because reversal zone is here. It was stated in live webinar in July last year. I got a lot of thank you emails from traders who never saw it coming. Just because I said, oh, reversal zone is next. Do not ever ignore it. Respect it dearly. Chances of Amazon breaking through this level is only 20%. Just to remind you, that's exact same thing S&P had done on hourly. How many points did S&P collapse? 16. From 2074 to 2058. Formula remains the same. All spelled out by this magnificent Fibonacci sequence. And this is the crucial rules that I teach every day, and this is all I trade. Here it is, the magic of Fibonacci and the secret to AlphaWaveTrader method. In the course you learn to only trade the inception of the trend. You never ever trade wave 2, and last opportunity you have to buy is wave 3. When market comes to the end of wave 3, you stay out. Otherwise, you acquire position at reversal zone, which is nothing that you want to do. The only reason you're acquiring position at reversal zone if you are interested trading with 20% success rate. That's exactly what has happened when Euro collapse reached this level. But this is what separates knowledgeable trader who randomly gets my reversal levels and starts buying. Euro could not be more clear. Euro weekly, which I will show you where the collapse came from, gave only bullish corrections. This is the exception, and this is picture perfect reminder. There was absolutely no reason on the planet to close your shorts. It's all in the price. Reversal zone is in. Euro struggled for 3 weeks and broke. Reversal zone 2 is in. But Euro was not able to get outside of reversal zone 1, gave massive number of fluff and continued further down. But this was a fun part. That's where the collapse came from. That's a reminder. Don't ever acquire a position into reversal zone. That's where collapse on Euro started from. And that's where Euro is heading to. Euro is heading to 1. And guess what is Euro telling me currently? 1 will be the end of the minor trend. As you witnessed today on S&P, S&P fought for 5 hours at the end of the minor trend. Euro will give us fight for its life. This is where it's crucial to monitor for AlphaWaveTrader rules. And if Euro is not gonna give us bullish rally at this level, it's heading to 79. And that's when the party will start for us poor Americans. We will not be poor for many years to come when it comes to traveling the world. Again, key, monitor at 1. Short from 3,800. Clear? That's simple. Every time Euro came to reversal zone, gave you a very crucial and very powerful reminder. Nothing in this world is random. You look at beautiful flowers. You see magnificent symmetry. It is all found in price. You look in the mirror. Do you ever ask yourself a question? Why is human face so perfect? It's exact same formula that found in price. Just to remind you what we witnessed day before. This was the end of the minor trend on S&P. The fight went on for 4 hours. That's where Euro heading to next. I don't know if Euro's gonna fight for 2 hours, 4 months, 4 years. I don't. I can't time the markets. My strength is in price and levels. I know this is the key. And based what I see today on March 17th, this level will be broken. But once it will make it to 1, that would be crucial to make decision at that time. If we should buy Euro, or we know that it would break through that level. And that's the formula I demonstrate in day trading room every day. It's all in the price. This is the dance, and this is the formula I discovered. And that's the dance you're witnessing here on Nasdaq. Major trend, 5-wave formation, collapse from reversal zone. This is when traders' knowledge is especially tested. Yesterday was extremely powerful day, one of the most crucial days in the markets. When you have ranging markets like this, which is something we witnessed on gold, and that's where gold collapsed from, remember? We will review gold, and I will show you. Gold came to reversal zone 1140. We had a buy first week in November, and that's where gold collapsed from. And if you would like, later at the end of the webinar, we can take a look on gold yearly levels, as gold heading into oblivion, just like Euro. And here is a reminder, this was our FOMC on July 10th. Pay attention to decision point 1, the end of the minor trend where price had struggled for 5 years. And here is decision point 2. Clear? All set in a price far in advance. You just have to recognize that price repeats magnificent dance each and every time. If you're trading trending markets just like some of our students do, I highly encourage you, when you come to the website, you can listen to our wild DEX traders. If you click listen to our graduates, must proudly say we're the only website in the business who posts interviews with graduates and give full access to our students. You can listen to our wild DEX traders. You can see Michael's pictures on the website. We're getting together again next week in beautiful Newport Beach, California. You can listen to traders who trade anything. Randy just finished private mentoring and trades Forex long term. Greg, with whom I have session today at 6 p.m. EST, trades options, S&P and stocks. Greg is an experienced trader. Set chow cap out to indicators. Janice is a beginner trader. I highly encourage you to listen to her, as she should be a role model for every single trader on the planet. If beginner trader can do it, so can anyone. Janice came to me along with Connor, who is finishing up course for this month. His father finished the course and brought him to the course. Never pushed a button on a platform, ever. So if a beginner trader can do it, so can anyone. This month I'm doing something that all of my graduates love, and I started doing because my graduates had been requesting that. Once or twice a year I do a Fibonacci trading bootcamp. I close trading room completely. We go into lockdown. We're trading without interference from anyone. Everything closed as of April 6th. In Fibonacci Trading Bootcamp, we will be mastering basic strategy, but the focus will be on my strategy number 16, Dream. There is a very good reason why I named it Dream. If you cannot trade Dream successfully, there is nothing else that can be better. It's most simple, easiest strategy that has the highest ratios of any strategy I developed. Ratios can go up as much as 1 to 10 and 1 to 30. A couple of my mentoring students, 3 of them already trading Dream. And that's the focus of the bootcamp. So if you're signing up in the March of March, you're extremely fortunate and extremely lucky. It's included in the cost. All the graduates have to pay extra. After the bootcamp, I'm out, I'm gone for a while. And then we'll be back after long vacation. So, this is the best time to learn. If you join the bootcamp, you get quadruple amount of education and your savings are incredible. Nothing that I have any plans to do ever again. We have only 5 spaces left. As of half an hour ago, we're actually down to 4. We are actually down to 4. So in a nutshell, this is AlphaWaveTrader method, and this is what it's all about. In these multiple examples, you could see that at the end of wave 3, the worst idea ever to buy. You're entering at reversal levels. Here's another example confirming exactly that. Worst idea ever. Respect reversal zone. Don't ever enter into these levels. Here's a couple of examples and I look forward to your questions. Here's a spectacular, beautiful rally on oil that you had opportunity to buy at 35.30 level. If you're trading AlphaWaveTrader trend inception strategy. And here's picture perfect reminder what happens if you're buying at the end of wave 3. If you're trading oil, you're an experienced, knowledgeable trader who has top-notch execution, who loves one of the fastest, lowest liquidity markets there are, outside of DAX, of course. Oil will take you for a spin and surprise of a lifetime. Therefore, I highly encourage new students not to touch oil until you double your account elsewhere, such as S&P. And this is one of the cleanest charts of all times. No correction, smooth solid right on Google 1-minute chart. Stunning, gorgeous, major trend right here in front of you. And this is all I teach in the course. 2 basic concepts. Price for entry, Fibonacci for exits. No software, no indicators. Method applies to any market and any time frame. Fibonacci price waves is what price is in the markets. Pure price action is what defines wave formations, forms waves by Fibonacci levels, therefore giving you high probability targets, high probability entries, and shows you crucial areas what not to enter into. And this is one of the most crucial components of your trading career. When to stay out of the markets, like yesterday on S&P, when market was in 4-hour corrective fluff. When you come to the live trading room tomorrow, if you would like to watch me demonstrate the method on oil and S&P, tomorrow a focus more than likely will be on oil. As we know, oil at historical lows, and tomorrow is oil news day. After that, I will be reopening room for FOMC. So again, more than likely, knowledgeable trader takes the morning off on FOMC day and comes to the screens around 1:45. That's when the fun begins, but you would only enter your trade after FOMC release. So very, very important news release on oil. Again, next level 42, spelled out since 2011. 42 is broken, oil is heading to 40, and then 33. We are at reversal zone on oil, so far only bullish corrections. S&P at reversal zone to the upside, only bearish corrections. And that's the power of the price and Fibonacci. And the reason why I demonstrate the method on oil and S&P is because they're completely opposite instruments. The only thing they have in common is they're both derivatives, they're both futures. So in live trading room, you would watch the trades. Simultaneously, I run education room. If you don't hear me speak in the trading room, I'm in discussion with my students. Currently, we have 35 students in education course. And typically in live trading room, we have anywhere between 50 to 80 customers who watch the method, and about half of the customers convert to education room. Those who do not come back to me a year, 2 years later and say, oh my God, I wish I listened to you. So, if you found something that works, stick with it. Don't go anywhere. Don't listen to anyone. If you found something in trading that doesn't work, stop the cycle. Recognize that the only magic in trading is price and Fibonacci. And once you master that concept, you never need any indicator ever. Trading room open at 9:30 sharp. 6 trades, I'm out. Because we had extremely slow day yesterday, both oil and S&P were in corrections. Today I went over the board. I demonstrated 9 trades, which is one of the highest trades ever. We could have had 25 trades today. Extremely active day. So this is it, traders. This is all I have for today. Let me give you invitation to the trading room for tomorrow. And again, if for any reason I can't find that invitation, I found it. I highly encourage you monitor your email inbox, and you will have the invitation to the trading room for Wednesday and Thursday. My pleasure, Dane. My pleasure, Burton. I would love to hear your questions, guys. If you would like me to take a look on any instrument, on any time frame, as long as it's major stock, futures, forex, indices, I would like to take a look at that. I see that Gary is typing something. Long-term gold, excellent question. Let's look on long-term gold. A couple of weeks ago, first time in my life, a lot of things come to me in my dreams. I ask myself a question. How come you never looking at yearly charts? I woke up and I said, that's the strangest thing ever. Why never in my life did I look on yearly charts? That's where gold is heading to long term. Bam! Gold is heading to 784. 800 is very important level, not far off from 784. Expect fight on gold for its life. What is gold telling me currently today on March 17th? The fight will be brutal at that level, and more than likely this level will be broken and gold collapsing to 481. But again, one step first, each level first. Crucial to monitor formations at 800. Again, common sense logic. 1000 also will put up quite a fight. None of that matters to me. It's worthless. Gold is telling me it's heading to 800, roughly 784. Yes, I recorded the session. Greg, we looked on S&P multiple charts. Let me show you S&P yearly charts. I had showed throughout the webinar. This is S&P, Greg. I've shown this chart multiple times because this is what we trade. We've been buying S&P. This is S&P. I had also shown S&P monthly chart multiple times. Just so you recognize it. If you're on different platform, this is S&P. Make sense? That's monthly chart and that's hourly. S&P at reversal levels, 2100. And this is hourly levels. This is all I trade. Hourly chart in day trading room. So let me show you S&P yearly chart, and then we will look on Bank of America. S&P at reversal zone. There is no ifs or buts about it. We are in bearish corrections on yearly chart. On yearly chart. We may get first bearish corrections and then ultimate reversal. I don't know if it's going to happen next week, 10 months from now or 2 years from now, but these are the levels in front of you. It's not the time to buy S&P. Monthly chart cannot be more clear. Solid bearish correction since the month of October. Month of October was the most brutal bearish market since 2010. And this was magnificent beauty, where buyers came from with vengeance. Make sense? So yearly chart pointing up to 2147. We're not far off. Buyers are completely exhausted. Buy on S&P since 800 level. So let's take a look on Bank of America, shall we? Any other questions, please let me know now so I can set up Instrument Manager. Let's look on stocks, Bank of America. Any major stocks, I will gladly pull it up. Excellent question. Michael, do you trade bonds? The best time bonds move 3 o'clock in the morning. Ten-year bonds, we're looking at 30-year bonds with my latest strategy. 10-year, help me. This one, right? The N? Clear? Well, you have to play by the rules. Learn the rules and you can quit any job. The best job on the planet is being a trader. So let's take a look on the bonds, shall we? But you have to be passionate about your job. As I say to my students, this is one of the visitors asked me in a trading room, where's Google? Ouch! Google reminded you, came to the end of the minor trend and completely reversed. Speaking of the devil, let me save this image. See my strategy dream I'm working on. Let's go to Fibonacci forum. Google end of minor trend. Very crucial reminder. Make sense? Again, don't ever enter into this level. That's why I made it very, very pink color. Because we always have minor trend, we not always have major trend. Correct? So let's go on Bank of America and ZN. Are we talking about 1 minute or are we talking about yearly? What chart? I need the time frame. Long-term bonds. Bank of America weekly. Not sure. Somebody asked me weekly chart. I want to show you where was a good time to get out of Bank of America weekly. Can it be more clear? How marvelous this price. Is everybody clear? What's happening on S&P is very similar what's happened on Bank of America. We have identical structure. Monthly Bank of America. Let's go. Let's go. Bank of America is setting up for quite a lovely rally. Let me show you where Bank of America is heading to and why you should have bought Bank of America in 2009. When I look at the stock charts in 2009, I just want to cry. Let me show you where Bank of America is on monthly chart. Is that clear? In 2008, I got obliterated because I was stuck in phenomenal fundamental stocks. That's when I developed my method. When I look at these charts, I'm like, my God, can we have a bearish collapse again? This chart makes me cry. Can it be more clear? Look to buy if you know the rules and know when to get out. The same decision point too you just witnessed on S&P monthly. Last chance to buy. Shocker, Bank of America. Get the heck out of your long trade. Why is it Bank of America fighting right now? Is it possible? That's an obstacle. This same area. This same level. Thank you, Gary. I pinch myself every day. Every day. So, what would I do about Bank of America? I would not be buying Bank of America with a lightning pole right now. Bank of America is heading drastically lower down. Let me show you where Bank of America is heading. Bank of America is heading to 1283. 1283 will be the end of the minor trend. Response at this level is crucial. Absolutely crucial. Bank of America, if you know AlphaWaveTrader rules, you may have spectacular opportunity to buy at this level. If this level is broken, Bank of America is heading to 11 and then to 8. Make sense? So I hope you got out of the trade when trade came to crucial levels. Right now is not a good time to buy Bank of America. Any other questions about any other stocks, please? Did I look on the I'm sorry, did I look on the bonds, 10-year bonds? You want to trade bonds, you want to take yoga in Newport Beach. Bill Gross is always in class. Bond King. Bill is yoga fanatic. He never misses 9 o'clock yoga, ever. Bonds are in bearish correction. I should show this chart to Bill. I don't trade bonds. Don't trade bonds. Very crucial area on bonds. This is when we're gonna find out if it's a good time to buy bonds. You know what I would like to do? It's extremely crucial level. I would like to look on bonds daily chart. Let's do that. So again, more time I spend with price, more I recognize how magnificent, precise and simple price really is. If you're as fascinated with price as I am, I highly encourage you, remove all the indicators and get to work. So this is what bonds daily chart is showing to me. We have a bullish rally in a play on daily chart. Very crucial level 128 on bonds to the upside. That's when we're gonna find out if buyers mean serious buying pressure. Make sense? If bonds breaking through this level, bullish trend is major and bonds will fly much higher up. That's bonds daily. Bullish rally in a play, very close to the end of the minor trend. Any other questions, traders? My pleasure, Kelly. My pleasure. What do you mean why 3 reversals? 3 different levels have different meaning. That's what the webinar was all about. This is the end of the minor trend. If buyers weak and bullish trend is minor, they will find serious selling pressure. And this would be ultimate destination. This is when you need to monitor for AlphaWaveTrader rules, as you may have very powerful shorting opportunity. This level broken, no shorting opportunity, bullish trend is major. It's heading here and then here. This is major trend, this is minor. Big difference. Any other questions, traders? That chart on Bank of America is insane. Let's look on bonds yearly, why not? Before we close out. No Forex traders here? None? Nobody has any questions about Forex? I live and breathe Forex nowadays because I'm so sick and tired of being poor American. So it's going to become only better and better for us to travel. This is where bonds are heading to, traders. Rally on bonds when it comes to yearly chart is not over. Bonds are heading higher. 139 is next. 139 is broken. Bonds are heading to 164. Okay, Kelly, anything for you? If you're trading Forex, you should never day trade Forex, ever. Day trade Forex is the worst idea ever. You get killed by a spread. What pairs would you like me to take a look? Aussie dollar, what time frame? Some of my best, coolest, funniest student in Brisbane, who is coming back to boot camp, our Brisbane Puma. Currency, let's go. AUDUSD, here we go. What time frame, please? Monthly. I was in Sydney when Sydney was 40% more than dollar. That was a disaster 2 years ago. Disaster. Let's see where Aussie dollar yearly chart is telling us. I can't get enough. Woohoo! Aussie dollar tanking. I love it. Look on yearly chart. Music to my ears. And this is the importance for you. Who was that? Michael. The importance of different levels. Bam! Yearly chart. Is that clear? Bullish trend is minor. And here is the collapse. What a beautiful place to short from. Remember I said was 40% more than dollar. I spent New Year 2013 in Sydney. Highly encourage you to do the same and put it on your bucket list. Absolutely insane. Takes a whole new meaning to fireworks. Not very smart decision on my part. Now is much better time to go to Sydney. Let's go on monthly chart. Heads up, expect very powerful push to the upside at 700 level. Monthly coming up. 700 it is. Look what monthly chart is telling us. I promise you I'm no psychic. I just spend time with price. This is what the price is telling me. This was a pullback not far off from the end of the minor trend. 2 months price sitting very pretty at 75 level. And that's where it's gonna start finding buyers, not far off from reversal zone. So if you shorted euro, shorted Aussie dollar, you are in marvelous shape. Spectacular shape. And let's close down with gold. This what separates knowledgeable trader from trader who trades corrections. This is gold collapse from 1300 level. Remember I shown it to you earlier. Let me take you back down to the memory line to what happened in the month of October. I met someone who came to me crying. He bought a gold mine when gold was at 1800. You have to be out of your mind to buy gold when gold at 1800. So here's the lesson on gold. Here's the lesson on gold. This was gold monthly. You see that? The chance to buy gold at 1140 in the month of November. Let's take a look on the progress and let's take a look on daily chart. This is for you, Michael, to make it more clear. Buy on gold from 1140. Found huge resistance at the end of the minor trend for 3 weeks. The most crucial level in the market structure. Does everybody remember what happened at 1300 level? Do I need to remind you? Reversal zone reached. That's where gold collapsed from. Correct? Not surprising. Very important. Fibonacci level spelled out by gold from 3 years ago. 1300 not broken. Gold is heading further down. Down, 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 baby. And that's AlphaWaveTrader method. And that's the magic of the price. So it's my pleasure and joy to be with you. Look forward to seeing you in my trading room tomorrow. Any questions? Always click on Contact Us. You can see my direct email, my direct phone number. Always love to hear from you. You would love to join us on discovery of Fibonacci in price? Sooner you sign up, more prepared for the bootcamp you will be. Again, you're getting additional 120 hours of education and astronomical savings. So as of last hour, only 4 spaces left. So thank you, traders. Thank you for your time. Pleasure to be with you. I hope you learn that price is magic, and I hope you are as fascinated with price as I am. Have a magnificent afternoon. Look forward seeing you tomorrow. Thank you, Kelly. Thank you, Greg. Thank you, Burton. Thank you, Michael. Thank you, Bob. Thank you, everybody. Thank you so much. Any questions, always feel free to call me. Good night.